Hello guys, welcome back again to my YouTube channel. So in today's video, I'm going to be giving you guys the best strategy for gold, and this strategy works on any given time frame of your choice. All right, this strategy is going to help you to pass your problem account, be it a 5k to a 200k. You understand? So I'm going to teach you guys how to actually use this strategy to trade your $5,000 prop firm account and make more than a $2,000 payout on that prop firm account using this particular strategy. Everything here has actually been proven to be working perfectly. You don't need any other strategy other than this particular strategy. So just stay tuned with me. Let me show you guys how I actually use this strategy to get good payouts and good risk to reward ratio and good entries. So right here you see this is a particular setup, okay, on gold, all right, that I actually shared with my VIP members. I shared this setup last night, and this morning when I wake up, the market was actually there. Mind you, I have taken this trade like 2 times, all right, twice this morning. The first one failed, and the second one is actually playing out. The second re-entry is actually playing out. Why? Because there are some specific things that I look for, and I want to actually minimize my risks and maximize my win. So I don't give my stop loss too much room, because I have backtested this strategy numerous times and it works. It proves to have worked, so that's why I stick to what works. So I'm just going to be giving you everything for free, and if you still don't understand, don't forget to come to my DM. So let me show you guys my Telegram channel. This is the setup which I actually shared to them yesterday, and today the market just came to our breaker block. Our breaker block is where we enter our trades from. Okay, so that is it. All right, the market swept our inducement and dived into what our breaker block. All right, so now let's look at Friday. Okay, Friday. Yeah, I could remember this was a trade I took on Friday. So this was a trade I took on Friday, and we targeted the area, all right, smashed the target, but actually the market went as far as this area right here. So this was a target, and we made about $800 from that single trade. Meanwhile, I would have made like $2,000 from this single trade with the same risks. Okay, so now I'm just going to go back to my my trading view and break everything down for you guys, show you guys why this is my best setup and why this works best for me. I'm going to explain everything to you guys step by step without wasting your time. All right, so first you want to identify a shift in market structure. All right, so now if we look at this chart, okay, let me zoom in a little bit. You can see that the market has actually broken this structural high. All right, that was a Friday Monday market open, because the market actually opened with a gap before actually dropping to this area right here. So we want to see a shift in market structure. Okay, so now when you see a shift in market structure, what next do you want to do? You want to identify what your breaker block, because your breaker block is more or less like what an order block that actually failed. Okay, so your breaker block is a failed order block. So, and what does the order block do? If the market goes there, it supports the market to actually sell. But if the scenario is reversed and then the market breaks from it, when the market comes there, it is expected that it should buy. So now we mark our breaker block, all right, and then we mark our inducement. So therefore, what we are looking at is simply a scenario like this. Okay, so we are looking at a simple scenario like this. All right, so this is it. All right, this is it here. So right here, you can clearly see that we have that high. All right, and then we have something like this. All right, and then what happened? The market comes back, and boom, to the upside. So this is just the simple stuff. All right, so now we're just going to go down to a smaller time frame, the 15 minutes, where I redefined my breaker block. Right, so this is my breaker block on the 15 minutes. We have already that market structure shift, we have our inducement level. All right, so we entered this trade. Mind you, I told you guys that I've actually taken this trade twice this morning. Why? Because I utilize what the theory of confirmation, whereby I enter trades and I use confirmation on the smaller time frame to actually enter these trades, minimizing my loss and maximizing my wins. So right here you can clearly see the 5 minutes time frame gave me the confirmation I need, and upon the pullback you can see that I just went in for my my minimum target for this particular trade. Sometimes it's 1:10, 1:, so on and so forth. So we had a stop loss on this particular one. So I was like, okay, what next is going to happen? Let me just look at the smaller time frame and see. And then I was just observing. So the market was actually poaching traders. It seems more like I wasn't the only one who was actually interested in this particular level. So now let's look at the 15 minutes. Upon the 15 minutes candle close, I was like, okay, this looks good. And then the 30 minutes actually closed and gave me that confirmation. So I immediately entered again without being afraid of losing. So you see, I'm still going to make a massive returns on this, but sometimes the reason why I like this smaller time frame is this, because the risk to reward ratio, sometimes I can get up to 1:17. Okay, when the market has enough volume. If it was the New York session, okay, not the London session, if it was the New York session, I don't think I would have actually had that SL. Okay, sometimes the market actually moves with volume. So down to here, yesterday there were some setups which I was actually looking at here. Okay, all right, so I took my first entry yesterday somewhat around here. Okay, and we are just going to go back to smaller time frame and look at that. And then there was another setup somewhere here, and then we'll come to that. So now let's go to the 5 minutes time frame. Let's look at other stuff small on the smaller time frame. Okay, like I told you guys, we will need a shift in market structure. Okay, so we look to the left, we're looking for our shift in market structure. Right here we have our shifting market structure. So what next are we looking for? We are looking for a breaker block. Okay, a breaker block is what? And a failed what? Other block. So right here we have our breaker block, which meets our criterion, our entry criterion for our trading. All right, so coming down to the smaller time frame, because this is already happening in 5 minutes, you need a confirmation to actually take those trades. Okay, so right here we have our confirmation, and then we entered. What happened? It failed. All right, that was still the London session. Okay, so that was still the London session. We are aiming to actually target this particular high. Let's see how much we would have made from this if it actually played. We have made a risk to reward ratio of 1:17, and we just lost 20 something pips, 21 pips or something. And then it should have been a very beautiful trade, but still they failed. So right here, I was actually looking at this particular setup as around the New Year session. Okay, as around the New Year session, I was looking at this setup. All right, so let's look at it from the 15 minutes time frame. Okay, so from the 15 minutes time frame, we are just looking at this, and I was like, okay, this is my breaker block on the 15 minutes time frame, and I also have this breaker block right here. So that means if that would have failed, I would have been taking it from this particular area. Okay, if that would have failed, I would have been taking it from this particular area. And do we have a shift in market structure? Yes, we have a shift in market structure right here. We also have a shift right here, and also that high there was actually taken out. Okay, the high was taken out, the London session high, or probably the ASEAN session high. So that high was taken out. So now we have a market structure shift. All right, we have this breaker block, also have this breaker block. So on this particular breaker block, you come to the 5 minutes time frame. Okay, come to the 5 minutes time frame, I'll see, you can see this particular one from the 15 minute, see that 5 minute breaker block. You're also seeing this particular level. So these are high levels which I actually wait for. So the next thing I'm going to mark is my inducement level. Okay, so the market is always looking for liquidity, so that's why this strategy is very, very important. So the market almost came as if it was going to come and tap into this area. So but what happened, the market did not actually get to that area, but it went as far as smashing our target. All right, it went as far as smashing our target. I would have made a very good risk to reward ratio of probably maybe 1:20 or probably 1:16 or thereabout, because this strategy, the stop loss is always very, very minimal. All right, so now let's go. There was this particular trade which I took on gold, which was last week. I remember showing you guys, that was Friday. So you guys can remember the screenshot I showed you from the Telegram channel. All right, so from the Telegram channel I showed you guys this particular screenshot. So right here you can see that we have what our market structure shift. Right here we have a market structure shift right here. So this is our market structure shift. Okay, so if that is our market structure shift, we are looking for our inducement level. Okay, so our inducement level, and then so this is our inducement level. Okay, inducement level. All right, which is the imbalance. The market is always looking for liquidity to grab. And then we have this second break of structure. Don't always forget that. Okay, so we have the second break of structure. Don't always forget that. I think I neglected that. All right, so we have this BOS market structure, break of structure. Okay, so now what happened? The market comes back to our liquidity point and then tap into it and gives us this particular wonderful confirmation right here, which you see. And then I was targeting here because it was almost like 4 p.m. at my time, when it was just left for a few hours for the market to close. When doing that, the market will actually get a momentum and kick to that high. So the market just did that. We're able to take our profit right here. So this is a very wonderful strategy to trade, guys. It requires patience, it requires discipline. So just stick to the rules and you're gonna make money. So all right, so guys, we allow go to keep playing out. I'll update you guys much more later on how things plays out. All right, so stay blessed.